Good afternoon, and welcome back to another episode of the Grimaldo Group, where we love helping families create wealth through home ownership. And today, the topic is where are interest rates going? What is taking place? And with me today is Javier Porras from Zetta Mortgage. Javier, how are you today?
I'm good. Thank you, Uncle. Thanks for having me over, man.
Well, it's an important topic because many people today are always talking about interest rates and where they're going. And so I wanted to take a few minutes to discuss with you what is taking place here.
Yeah,
What's your take
absolutely.
on the interest rates?
It's a really good question. Right now we've seen interest rates be a lot higher than what we've used to, particularly in the last 6 to 8 months. And there's two main driving forces for that. One being inflation and the value of the dollar coming down, as well as the war in Russia putting pressure on some global markets, especially oil. So with those two things, has really driven interest rates up. The federal bank has committed themselves to increasing the Federal Reserve rate, which is what banks borrow at, and ultimately it trickles down into mortgage rates. But they are committed to having the inflation be closer to 2%. Right now, we're at like 8.2 or 8.3% inflation. There's new inflation data coming out tomorrow for the third quarter. So we could see a big change in mortgage interest rates here just this week. So it's an exciting time.
What changes do you foresee happening?
So the Federal Reserve has committed themselves to increasing rates this year until inflation's under control. Last quarter's data, I think, was 8.3% inflation. I don't see inflation dropping from 8 to 2% in just one quarter. So I think they're going to continue to increase rates throughout at least the end of this year and probably the first half of next year.
Now, do you think the midterm elections may play a factor in any potential changes?
I believe so. I mean, I think typically around election times we'll see a change in rates depending on who's in office. The idea is that maybe interest rates may come down after the election, and or at least not go up as aggressively as we've seen in the last 6 to 7 months.
Now, me being a realtor, I've seen it's taken it's created an impact in the market. Now, there's pros and cons to everything. And I've seen that buyers that were not able to purchase from May and past May, from the last year, even the last 2 years, where there was difficulty, where a VA was wanting to get 100% financing, or a FHA was trying to get a house with 3.5 down, couldn't compete. They can now get on the market and get 100% financing because now you're getting price reductions, you're getting concessions.
Exactly. For a lot of the folks that have maybe waited and for prices to come down, this is your opportunity. If you have been saving and storing away, like for those folks that have been waiting, this is actually a great time because there are no more bidding wars happening as frequently, and you could get a really good break either in price or in seller concessions. So you can either lower the price of the purchase price, or you can get some credit from the seller, maybe a combination of both to help pay for your closing costs. And so with that, there's actually a couple of good things that you can do with your seller's concessions. One of them is to permanently buy the interest rate down, which would mean that you could actually pay to get a lower interest rate. Or you could temporarily decrease your interest rate for 2 or 1 years with a program that we have called a 2-1 buy down.
Okay.
And we've seen that make a big comeback here recently.
Can you break that down for our listeners to understand completely that concept?
Sure, absolutely. So there's two types of buy downs, permanent and temporary. Permanent buy down is exactly what it sounds like. You are paying money to get a little bit lower of an interest rate, maybe 1/4 to 0.5% lower permanently for the life of the loan. And then there's a temporary buy down, which have become more popular lately because of our higher interest rates that we've seen lately. And there's two different types of temporary buy downs. The most popular is a 2-1 buy down, which in the first 2 years of your mortgage, you have a reduced interest rate. So in the first year, you would have a 2% lower interest rate than market. And then on the second year, you'd have 1% lower interest rate than your permanent rate. And then on the third year, you actually go back to the market rate. And so you can see big savings in the first couple of years that you're into a home. Most of the big expenses you'll have in your home are usually within the first 12 months.
Yep.
And like we mentioned, I think that interest rates are going to cool off like towards the maybe middle of next year.
Yeah.
And those people can refinance out of those temporary buy downs in the future and permanently have a low mortgage payment.
I mean, if interest rates continue to rise, who knows? Maybe they may go to 10%. But as anything, things can come down from where they're at. All right. I would, in my opinion, I would not focus so much on the interest rate, but I would focus on the mortgage payment. If you're going to buy a particular property, see what you pre-qualify for. What is the mortgage payment that you can afford? And let's focus on finding a home that goes along with your ability to pay X amount per month. Because the interest rates are the interest rates. Again, when I bought a property in 1998, a condo in San Diego, it was at 7.5%. But I just wanted to know, can I afford the property? Can I pay the monthly mortgage payment? And because I didn't want to continue to pay rent. So when you pay rent, how much interest rate are you paying? Well, you're paying 100% if you want to look at it that way, because you're paying someone else's mortgage, which is not working in your favor. And I decided not to continue to do that because they kept increasing my rent. And I latched on to an opportunity to buy a property at 7.5 interest rate. I didn't focus on the interest rate. I was able to afford that mortgage payment, which was great. And I began to build equity. Okay. Eventually, as years went by, the rate started to drop and you can refi. But,
Sure.
these are things to consider, buyers out there. So, right now, where are the rates?
Rates are going to be in the high sixes or low sevens, depending on the program and your credit. But they could go higher, as soon as tomorrow, whenever the inflation data comes out.
And what do you think is happening with the prices each time that interest rates go up? I know because I'm in the real estate business.
Absolutely. So the higher the rates go, the bigger the opportunity actually for buyers. So
Yeah.
believe it or not, this is still considered a seller's market, and I think that there's still opportunity right now, and there's going to be more opportunity in the future. So
Well, I'm seeing more cash buyers popping out of the woodwork, and there's people in the trenches keeping an eye. So they really don't get affected by interest rates. So I've had cash buyers. As a matter of fact, I lost on three separate homes that we placed offers on for our clients, where unfortunately we were not, our offers were not accepted. We finally eventually found a fourth one, but this just paints a picture. The inventory has increased, okay, just as the interest rates have. But I think from where we were at 2,500 homes, single detached family homes in Maricopa, that was crazy. That wasn't a normal market. This is a normal market. But the tendency is to say the inventory has increased, it's about to crash. Do we really look at the numbers and where we were at? Okay, so interest rates have risen. If we're looking at a property that's $500,000 at 3% or 3.5%, now at 7%, that house is probably going to drop, is it not? In order for people to begin to qualify, because if not, that payment is going to be a lot more. What is your take on and feel on the market? How are people responding with regard to the mortgage side?
sure, sure. Well, there's a lot of you see a lot of headlines out there, and a lot of these places actually make money by just getting people to click. So you got to watch out for some of that clickbait. People want to see gloom and doom, or some sort of a quick, easy solution to something. But I think if we just look at history and take a look at what has happened in the past, it might help us guide us in the future. So right now, as you mentioned, you have to make sure that you can afford the home first and foremost. real estate is going to pay off, and it's going to be a typically 2 to 3 year break even point, and whenever you're purchasing a primary residence. So if you can stick through and make it to the 2 to 3 year mark, you're actually going to be making money on your real estate, because you'll have paid down your principal. You've been paying your mortgage each month. And if we just look at historical charts to see what values have done over the years, they've done almost nothing but go up. It's almost for sure that a home today will not cost the same in 10 years. It'll almost for sure be more. So if you're putting your money into real estate, especially in uncertain times like this, I think that's actually a safe place for your money, because right now, if your money's sitting around in your bank account or underperforming in the stock market, you may actually be wanting to move it into real estate in order to make sure that you're growing your assets, and that you're not impacted as much by inflation, which actually brings the purchase power of your dollar down. So absolutely, it's definitely a good time.
Well, again, if you or anyone you know is thinking about buying or selling, please give us a call at the Romaldo Group. My number specifically is 623-200-1534. And then if you need a mortgage broker, I know one that is actually very, very effective and proactive. Javier Porras, can you provide your information, please?
Yes, thank you guys. Again, I'm the broker owner of Zetta Mortgage, and you can reach me at 602 288 4456. You can reach me anytime, text or call.
Thank you so kindly for allowing us this opportunity to come and speak to you about real estate and mortgage lending. Have a good day.
Take care, everybody.